Paper Traders. I am your host, Eric, and my co-host, Danny here, and we are two average Joes trying to beat the market. Today, we have an extremely special show. We've got a special guest, but we'll get to that in a minute. First, just some standard language. Make sure you like, subscribe, and leave comments on our page so you can get the latest news, information, and shows here at Zach's, which includes our weekly block of shows. We have every day at 11 a block of shows here, Paper Traders, and then at 11 on Tuesdays and Thursdays we have free lunch with Ben Rains. So that's kind of a big deal. We're streaming on all your favorite platforms, including YouTube, Twitter, and Twitch, including all your other favorite ones. And with that, let's bring Danny in here, and he can introduce Dave.
Yeah, so today we're talking to Dave Bartosiak, and as he kind of mentioned, we can take live questions. We're live streaming right now, and Dave would be more than happy to kind of dive into some stuff for you. I know there's a lot going on in the market, so I'm sure a lot of people are either panicking or trying to figure out how to navigate this type of environment that we're all kind of being introduced to. I think a trade war for a lot of investors, if not everyone, is kind of new to them. So
it's a little nerve-wracking.
Yeah, we have a lot to kind of go over. So, Dave, welcome to the show. I'm glad you were able to make it here today.
I made it all the way from sunny Sunrise, Florida.
How's the weather down there today?
It's just like it's going to be every day. So it's going to be nice and warm, like 88, 92 degrees, and then around 2 o'clock we're going to get a thunderstorm that's going to last like an hour, and then it'll cool off, and then I'll start grilling for the neighbors, and then
we feel so bad for you.
Yeah, you're living the life over there, Dave. What's going on? Can we get a piece of that?
Yeah, you just have to move out of where you are.
No thanks. I like Illinois. I would not survive in Florida. I think Dave knows that.
Yeah, it's too hot for you down here, man.
Way too hot for me. I'm a mountain person. So, Dave, you're our momentum stock strategist and editor of the Surprise Trader and Blockchain Innovators here at Zach. So you've got quite a lot on your plate, especially with the surprises lately, huh?
Yeah, Surprise Trader is always tons of fun. And when you get a trade war coupled with the Fed not quite being as dovish as the market wanted it to be during earnings season, it makes for a trying time for the guy who's there to pick earnings surprises.
Well, that's why we brought you in, because it is earnings season, and we're going through this turmoil and everything else currently with the market, ups, downs, and everything else. I mean, where are we at right now? Anybody get a quick look before we got started?
Yeah, I mean, we're still down a little over 1% on the S&P 500.
So not too bad, not as bad as yesterday or the day before that, but still looking pretty scary for some people that don't know what the heck is going on with what's going on in China. So with that, we'll just kind of get into the market news stuff. Let's start off with the trade war. China is threatening to pull all their purchases of farmer goods. U.S. is talking about jacking up rates on them once again. Dave, what do you think's going on here, and what do you think would be a good scenario here in the future?
We're kind of playing chicken with the world economy.
That's a scary way of thinking about it, huh?
That's exactly what's happening, and somebody's got to blink, and they're both in a contest, and they just need to stop, just put together a deal. Get a deal done. Let's move forward. Claim your victory, and let's go on to the next one.
Is it one of those things, though, that we might be waiting for the next election before we even see anything positively come out of this type of quote-unquote trade war or tariff war? Because I feel like they're almost waiting us out and just seeing what we're going to do or
who's going to come to power next, really.
Right.
Yeah, well, why wouldn't you? If you're China at this point, why wouldn't you just wait?
So, I mean, wouldn't you fear that the U.S. is just going to make it stiffer and stiffer? I mean, given there's got to be a breaking point for everybody, right? But, the U.S. is, trying to show that they're the tough guy. China's trying to show, oh, no, we're the tough guy. You've got two, essentially, world powers basically having a measuring contest. You know what I mean? So, it's got to come to a head at some point. What do you think is going to be the actual breaking point for either us or them?
If anything.
So the U.S. accounts for something like 27% of the trade coming out of China. So what they'll do is they'll just keep cutting that number lower and lower and just trade with somebody else. I mean, it's not like we're the largest purchaser right now, but we're not the only game in town. So all we're really doing is pushing China to trade with other people, because it's not like they're going to stop trading, right? So,
right, but we're like the largest consumers on the planet, right? Like we consume.
right, like 27% of their exports right now are going to us, and so then that number will just keep dwindling. I mean, that's what ultimately comes out of this. Is China? Look, they're communists. Don't forget that.
This
So.
is true.
Like the market forces there, they're not so worried about it. They'll just dictate something and mandate something, and that's the way it's going to go. We're not dealing with another, political and economic system that's just like us, where our tactics are going to work the same. It's not going to fly. Now, here's the other thing: is that the Chinese economy is getting hit by this for sure, because if somebody who was buying 27% of your stuff all of a sudden was buying much less of it, it's going to be a problem, right? In the short run, for sure. But in the long run, if you can hunker down and get through it, then it'll be over, and they don't care. This is the thing. They can wait till next election. They can wait till the election after that. There's no timetable on China. If you don't like what the government has to say about it, they'll just beat you up. Like,
well, I mean, that brings up that whole point about what they went and did with their, their inflation. They went and just cut their currency, right? Trump was going and, saying that they're, manipulating their currency against the market. So
sure, and if anything, China has been falsely propping up the price of their current.
Oh, for sure. We've talked about that for years about how they built ghost cities and kind of just done construction to do construction. So I mean, they're trying to show growth that doesn't necessarily exist. But I mean, that's also probably partially to keep their population employed too, right? Like it's kind of like no different than having a government job and working on a road crew, right? Why do we rebuild the roads 30 times in Chicago every year?
Yeah, don't get me started on that.
Well, I mean, I guess kind of stemming off of all this volatility that's going on, and it sounds like we can't sit here and let China dictate the way, I guess, we as investors will continue to, I guess, invest. So is there ways that you are looking to navigate this market right now with the up and down volatility? I mean, we saw a huge drop on Monday. We had a bit of a recovery on Tuesday, and today we're down again. So I guess, is there a certain sector or industry that investors can look to maybe quote unquote hide out or find some safe haven?
And to piggyback on that real quick, Tracy, when we had her on, had said this was a correction. Do you think that's also what this is?
Well, I mean, we're coming down to the 200-day moving average here on the S&P 500, which historically has proved to be a pretty good time to buy stocks. Now, that doesn't mean that this is the end of the downturn. Look, the two major headwinds for the market have been the trade war and then the Fed. And the reason why we hit all-time highs was because it looked like we were going to reach at least progress in the trade war, and the Fed was going to cut rates and then maybe give us a little bit of an easing cycle. So that's why we went to all-time highs. And then in the last week, not only do you have the Fed coming out, cutting 25 bips, and then basically saying, like, look, this isn't the start of a cycle, and then you have the trade war escalating. That's why we've sold off so fast. But we're in, what, 7% of the all-time high? Like, that's what everybody's freaking out about right now. Just let that.
Right.
The S&P 500 is up, what, 14% now this year?
Yeah.
Like, that's what we're worried about? That's what we're freaking out about?
So I think it is a bit of a correction, and this is nothing really to be worried about.
I'm not going to come out and say that there's nothing to be worried about, okay? Because obviously there's something to be worried about. Right now, here at or near the 200-day, I think we're going to continue to bounce, chop around a little bit. This happens during earnings season. You get chopped back and forth. That's kind of what happens. It just feels so terrible because it happens so quickly. We will go from the euphoria of being at all-time highs to having a few days in a row where the market just gets bludgeoned to death and people don't really know how to react initially. That being said, there are places that you can go in this market that are going to make sense, not just from the market's up and down perspective, but you got to look at interest rates. Since November of last year, interest rates have been coming down. If you look at the 10-year Treasury note, we're like, what, 1.7 today? I didn't see where it was today, but I think yesterday we were at 1.7% on the 10-year. Eric, I saw this in your portfolio, and I've been talking about this till I've been blue in the face. Gold is a great place to be because gold goes up when interest rates go down. So if you look at gold mining stocks, you're going to do well, and that they have been doing well over the course of these last several months. So that's been working. REITs have been working because interest rates are coming down. So you got to look at these things that are more interest rate sensitive. And if you want to be defensive and you have stocks that pay nice little dividends, that's a defensive play too, where you can make a little bit of money and you're going to get paid to wait. But really, when things get scary, if you're a long-term investor, this is when you should be more aggressive. You should be leaning into more aggressive names here and just understand that things will turn around, but you can't just blindly buy every stock out there.
Just because it's currently a value.
Yeah, this is when you really lean on the Zacks rank and look for stocks with those strong earnings trends over time, and you buy those.
Well, it's a good thing we got some stocks coming up for you later that you can give us your opinion on, because I specifically looked for a momentum stock knowing that we had you on hand, and I was hoping that we could get your opinion on it. Real quick, guys, again, we are streaming on all your major platforms. Dave is here live, so please get your questions in. I'm sitting here looking right now. We've got, again, Foo Boss, the stand-up, again, saying morning, y'all stay ahead is the best. We try our best to stay on top of the news, and that's the reason we bring these people on to give us their opinion, and I think today is a great day to do so. So to move it on a little bit, Dave, Disney came out to, let's just switch it up a little bit from the trade war stuff. Disney came out and gave their earnings. Danny and I were talking a little bit about this, in our first show, I think, or our third show, I think, was when we added Disney to the list. I actually added it to my portfolio.
Yeah, we hit or miss on it, once in a while. So it's one of those names I feel like has been really in the limelight of just news in general. They're making a lot of headways in their streaming services and their big box office movies. So there's a lot to talk about, but unfortunately, it looks like Disney kind of missed on their top line there. So, but overall, it's probably pretty good for them. Dave, did you see their earnings call or anything like that?
Yeah, I saw them get beat up. It looked like they were doing okay, and then all of a sudden, the bottom kind of fell out in after hours. I do like that what did they say, it was going to be $14.99 a month, and they're going to bundle.
$12.99. It'll be Disney Plus, ESPN Plus, Hulu, and the Hulu will have ads. So, but that's the same price as Netflix. So that's a huge competition they're kind of pushing out.
Not to mention all the different types of content they're throwing into that. It's not just movies. You've got all your TV shows from Hulu, and then all the sports from ESPN. So it's kind of like a mini cable package.
And they're taking all Fox's entertainment and going to put it into Hulu as well. You have I forget all the names off the top of my head, but I'm sure they have a list of movies and shows that they're gonna to put in there. So
what that list is? The Little Mermaid.
Oh yeah, Cheaper by the Dozen. They have that one. It's a lot of weirder, I guess, not for me but more for kids and stuff, I think. But I know that was one of their things that kind of hurt their earnings. They were saying that Fox's kind of bringing them into the Disney world kind of hurt their bottom line. Is that something that we should be worried about in the future? Or, from what I saw, everything was kind of growing from their media parks to the movies to their services. So, is there really even anything to be worried about after that earnings call, in my opinion? Or
no, you get the knee-jerk reaction of the market, and you never know what it's going to be. Sometimes immediately following those earnings reports, there's a huge institutional money that needs to peel off a little bit of chunk of what they already have, and they use days after earnings in order to do so because that's when the most liquidity is there. So I try not to put too much into what happens, the first day after earnings, first day or two, because you just never know what kind of market mechanics are going on behind the scenes. Now, over the long run, if you like that service, if the market likes that service, that's something that we're going to have to see here over the course of the next few weeks, few months, quarters. But is there anybody who's out there who's like, I got my Netflix and that's it?
No. I feel like everybody has like $100 worth of subscription services out there. Probably they have like everything. And at some point, I was actually talking to a buddy. I was like, at what point are we going to start kind of trimming down what we need and what services we use? I know me personally, I'm one of those subscribers that, for example, HBO, I only subscribed when Game of Thrones was on. And now that it's over, I kind of canceled that service. I sometimes do that with Netflix as well because of their kind of lacking of content in between certain times. So I don't know. I feel like Disney's media that they have for content is going to kind of fill the gap. I don't know. With Hulu, ESPN, and Disney, I don't I don't see a need for many other services other than them. So
Yeah, I pay for ESPN Plus. I think I did. It was like hooked into a pay-per-view UFC fight,
oh,
and
nice.
I got like the UFC fight, and then I got a year of the service, and I think it was like $60 or something like that.
Now,
Uh,
do you know if that rolls into your service now? Like with the new one, I didn't read in that. Did they say?
um, no, I'll probably just have ESPN Plus on its own, and then in the future they'll offer that bundle. But it's so funny. It's like we cut the cord so we can get rid of all these bundles, and then
And
now
now you're
just
paying for bundles.
rebundling again, and it's going to end up being what you paid for cable in the first place. These companies
Or
aren't.
more. In my opinion,
Yeah.
it's going to be more expensive. I mean, the way we were just talking about it, I mean, you've got Netflix, then you've got, HBO Go, then you've got, your Disney thing.
Yeah.
Let's not mention if you're a gamer or something, you've got that subscription service where they offer their content there. I mean, at what point are you making it more expensive than cable?
They want it to be more expensive now, so
Well, of course, they want every dollar they can get out of you. But I mean,
That's the
at
tug
what
of
point
war.
is the client or the customer just going to say, no, this is crazy?
It's just transferring from what we used to pay to Comcast, and now we're paying it to multiple, streaming providers. But that's good for the market though, because think about how many people hate Comcast, or your cable provider. I don't know anybody who's like, my cable provider is the best.
Nobody.
They don't say that because there's not enough competition. But
True.
in the streaming space, you got a ton of competition, so it's actually leading to better streaming services. So I like it.
Well, didn't AT&T take a beating when they went and raised prices recently? I'm pretty sure I'd read somewhere that AT&T raised their price by 25%, and they lost 250,000 customers. I
Yeah.
mean, that kind of shows you that people are kind of hitting that limit sooner than later here.
Yeah, but the problem is we don't have many choices, when it comes to your broadband provider. It's like,
This is true.
what do you have?
So do you
Whoops.
think I guess with the current evaluation for where Disney is the streaming service and kind of the expectations of what is to come in November, is that already priced in, or it looked from what I was seeing in the chart that it almost looks like we came back down from that huge jump back in April?
The market's always looking forward. That's why you get these stocks that get beat up after, an earnings report and their guidance is bad. We're looking out, the next year, and then everybody freaks out. So if you're looking out into November, that's right around the corner for the market. So they're constantly looking forward and guessing what's going to happen in the future. And, oftentimes it's wrong. That's why these stocks whip around so much.
Right. All right. Well, kind of going from there, I think this might be a good time to kind of give our stocks.
Oh,
that we
is it time to get in the Battleground?
Yeah,
It's time to go into the Battleground.
All right, here we go. Oh, we don't. It does not work. There we go.
I can talk. Well, I guess, the guys in the studio just wanted me to do my own soliloquy here because these portfolios, it's not working for them. So I'm going to take a look at Eric's portfolio here. He's got Kinross, Gold, Walt Disney, and Takeda. We touched on Takeda, or Disney rather, a little bit. But right now it's a Zacks rank number 3 hold. And then he's got Takeda also a Zacks rank number 3 hold. We work at Zacks. We have this wonderful ranking system. I don't know why these guys are not leaning on the Zacks rank, so I'm definitely going to have to play him when they get back to the technical audio difficulties that they're having right now. But Kinross Not a bad idea. I mean, you can pick any one of these gold stocks. There's a ton of them that are Zach's ranked #1 strong buy and Zach's ranked #2 buys. The industry rank right now, number 16. So that is the top 5 or 6% of the Zach's industry rank. So that's pretty good. And that's what you're going to see is that a bunch of these stocks favorable Zach's ranks, and that's why you have the industry rank so high there on the gold. And then again, so with the Walt Disney getting beat up a little bit today, that's kind of the nature of the beast. A lot of stuff is getting slapped down. So I'd like to hear their thesis on the rest of these. And Takeda, again, the Zach's rank #3 hold. Now, the VGM composite score on there is A, so that's good because you see it has sort of a relative value. That's why it has the value score of A. It's got a little bit of momentum score of A and a growth score there of B. So there's something happening behind the scenes right there that can potentially push analysts to increase their estimates over the course of the next several months. And that would help Takeda push up in the eyes of Zach's rank. Because ultimately, that's what it's all about, is pushing these earnings in a positive direction and the stock moving along with them. All right, guys, we're going to get out of here. We're having some issues there in the studio. I'm so mad because I was about to light up Danny Mac about his AT&T. It's gonna be great. I know he likes Argyle sweaters, but that doesn't mean he has to invest like a 75-year-old. But I guess we're gonna have to save that for another day. So thank you guys so much for chiming in or watching, and we'll see you guys later. Thanks.